Hey, good morning, everybody. We're going to bring in CPI numbers shortly. We'll live stream it, split the screen. But first, we can talk about what the CPI estimates are, right? Let's just dumb it down for everybody, please. If you don't understand CPI, please share it. But it's an inflation tool that the Fed uses to determine interest rates. When interest rates go up, things are more expensive for companies. When things are more expensive for companies, their earnings go down. When their earnings go down, the stock price goes down. So CPI going higher pushes downward pressure on the market. It's simple like that. Tomorrow morning at 8:30, we have PPI numbers, right? Producer Price Index. What does that mean? It means the goods and services that we are purchasing. As the cost of those goods and services go up, PPI goes up. Same outcome. Higher PPI, higher CPI, it means the Fed is going to raise rates and continue. So let's just talk about what's on the agenda right now. The Fed has 25 basis points at a 75 or 80% clip coming in next month, which is May. I think they do it on May 4th. After that, the market is anticipating 2 rate cuts before the end of the year. All right. So that's what the market has factored in. The Fed, and we'll hear the Fed minutes today. Again, Fed minutes from their last meeting come out at 2:30 today. So it's going to be a very important time. What will it mean for day traders? Let's talk about it in lamest terms. It'll mean a ton of volatility. All right. So the estimates are at 5.2%, right? Let's say we come in 5.1. I've heard anywhere from 5.1 to 5.3. Let's just say it's 5.3. Should be downward pressure on the market. Simple as that. However, the buy the dip philosophy is maintained. So what are we going to do? We're going to look at the dark pool, right? That's exactly what we do. So let's look at the dark pool level before the Fed drops. We still have 3 minutes left. Somebody brought it up for me this morning, probably a very smart platform member. So what are we looking for? Well, first off, the SPY is sitting at 409.72. Geez, what a shock. Didn't we close at 409.72 the previous day? Oh, no, we were, a few cents off, right? Let's just see how many cents off we were. Okay, so we're at 410.22 pre-market. Interesting, doesn't really matter that much. All right, so 408.84, huge dark pool level. What does that mean? It means if the market goes under there, then that will act as resistance. Meaning, if the numbers come in hot and the market drops and futures drop, and the SPY is sitting at 407 pre-market, if it gets bought up, it will likely go to 408.84 and then reject. Simple as that. This volume here will be shelf volume rather than demand volume. If the market takes off higher, then the 408.84 will act as support. Meaning when we drop to that level, all this shelf volume will turn into demand. So if we drop, you're going to see 408.84. You can even say 409 as the bottom. All right. Even though we closed at 409.72, meaning if the Fed, if the numbers come out less or cool, it means the Fed could pivot. It means the Fed could stop raising rates and actually consider cutting rates. At least that's what the market believes. So that's what we're looking for. With that said, still another minute and a half. So very, very quick lesson. And thank you for those who are joining me. But here's the quick lesson. The quick lesson is I'm going to talk about my option play. We always talk about lotto options. This entry point is most important. I'm going to give you guys an example of what I did yesterday, except I'm going to give it to you after the Fed, after we hear about CPI, because it's a very important lesson. I don't want to jam it into 1 minute. It's probably a 5-minute lesson. I'm going to show you guys examples, but it basically shows how one can achieve a 12,000% return. I mean, it's ridiculous. So stay with me after this lesson, and I'll point it out. Again, it's risky. Anytime you're going to get a 12,000%, it's extremely risky. But I fell under that category yesterday where I traded some, what was I trading? Some SPY puts. And yesterday morning, if you joined me pre-market, I did mention that I thought however the market direction happened, right before close, we'd see a 2-point drop or a 2-point spike. Meaning if the market was red yesterday, we're going to see a 2-point spike right before close. If the market was green yesterday, we're going to see a 2-point drop right before close. The market was 411. Where did we drop to? 409 and change, 409.30. That's when I got, anyway, so we'll talk about that option play, and I'll explain how you can earn or make 400, 500, 600%. It's all about timing, and that's the key importance. With that said, I think we're going to bring on CNBC. We'll split the screen now. get some volume there, see what they're saying.
Than anticipated. You historically look back at where it was and how far we've come to give it some perspective a lot of the time. What you think you might be doing that again today, or because people want it to continue to cool. They don't want it to just be lower than it was a year ago, but still stubbornly high. Do you think we get any relief today?
Yes. As a matter of fact, if you look at the year-over-year numbers since their peaks, so the peak was in June for year-over-year headline, the peak was in September of year-over-year core, they have been moving lower every single month since those peaks. So that is good news. The bad news, CBO tells us that every man, woman, and child owes $3,000. We're at 1.1 trillion fiscal year through March, which is well ahead, almost a $500 billion ahead of last year. So spend makes the Fed probably have to stay higher for longer. And the numbers are out. Our March release of Consumer Price Index expected up 0.2% is up 0.1%.
Yeah, cool.
High watermark was 1.3. That was in June of 22, the highest since 05. And since then, the lowest has been 0. That was July of last year. If you look at ex-food and energy, expected up 0.4, exactly up 0.4. High water mark, April of 21, up 0.8, highest since 81. Since then, the low has been up 0.2 in August of 21. The biggies now, 5% year over year. That was expected to be 5.1. And the rearview mirror still is 6%. And every single month, as I said, since June, when it peaked at 9.1, July, August, September, October, November, December, January, February, now March, have been lower. And if we look at 5.6 to year over year core, maybe the most important number here, here's where it gets interesting, Joe. 5.6 expected, 5.5 in the rear view mirror, gone down every month since September when it peaked at 6.6. This is the 1 month where it popped 1/10 higher, and it breaks that streak. Now, many have said it doesn't need to be linear. I totally understand that. We could look at 1/10, but if you take a bigger picture, we have made progress. But it really does become, and I'm so interested in how the Oracle of Omaha looks at this, it really does now become an issue of spend versus does the Fed tighten? How do they view the banking issues? And what rate is going to be high enough until we know what's going on with the budgets? Yes, go on.
Incredible moves in gold, in the dollar. It all sort of looks like it might give the Fed some breathing room. That the 10 years down, 10 years, futures went, the stock futures went up immediately, gold went up immediately. It all sort of, there's
a two-year note is at 392. It's down 14 basis points? Yes, and we've gone from we're at 337 now in the 10. That was well over 344. So, Joe, the markets are speaking loudly. I think we need to go back to Becky. At least I'm going to toss it back to Becky. We're all anxious to hear how Warren Buffett's going to respond to the big pop in the futures for equities and the big drop for interest rates. Becky?
All right. Thanks, Becky. So you heard it. I thought the estimates were 5.2. I guess the estimates were 5.1. We came at 5 flat. The market was expecting that. So let's just remember, and let's scroll back real quick. What was the market doing for the last couple of weeks? Buying the dip. If you follow anybody, they're saying market keeps buying the dip. Do I agree with it? No. I'm still a bear. I actually probably changed my tone for a little because I think we're probably going to run with those lower numbers. I'm sure the Fed swaps rate will tell us. The Fed swaps rate tells us they're either going to raise rates in May based on data and analytics and what it's going to do the rest of the year. Again, the market has priced in that we're going to get a 25 basis point raise in May and then 2 rate cuts by the end of the year. Previously, it had been 4 rate cuts. Does that matter? No, the market's still strong. So they're still doing a buy the dip mentality. I was watching crypto to see crypto's reaction. Crypto's reaction, it's the same as the market. It just made up that divot that it was off in anticipation of even flat. If the CPI number came in flat, now we're not done. We still have Fed minutes dropping at 2:30 today, okay? This is the Fed minutes from their last meeting, and we still have PPI tomorrow morning, same time, 8:30, probably be streaming it. So if you like everything that I'm going to share today, please join me. So the one example first of how you're going to make money or how I could have really crushed it yesterday. I was saying, and if you joined me yesterday morning, I said right before the market closes, right? If we're having a green day, market's going to drop 2 points. If we're having a red day yesterday, that market's going to spike 2 points. So whatever we were doing yesterday, we're going to see a 2-point inverse reaction somewhere close, maybe 3 p.m. So I said that. So what did I do yesterday? I bought my SPY puts too early. I bought SPY puts because I thought the market was going to drop. Remember, it was going up 411, right? I bought my SPY puts when the market was struggling with 410. All right. So I was taking a loss of 50%. What did I do? I averaged down. I'm holding these options that cost me on average, I think 34 cents. The price of the option is 10 cents currently, right? It was an hour before close. I needed the SPY to drop. The point is, those options went down to 3 and 4 cents, 3 cents or $3 per contract for the bid, $4 for the ask. I said to myself, I still think the market's going to drop, but I had the light bulb moment. The light bulb moment was, Matt, you could have waited till you saw rejection in the market. So instead of buying at 1 p.m., I could have waited till 3 p.m. So this is the great lesson for everybody. It's patience, but here's the point or the return. Let's not say I got in at 3 or 4. I almost thought about selling at 3:15 p.m. for $5 a contract, meaning I could have bought for $5 a contract if I was still on the sidelines. The point is, those contracts, as the market dipped and the SPY went to 409.30, those contracts went north of $70 per contract. So $5 a contract, $70 a contract, you're talking about a 1,400% return. Now, what did I risk on that position? I was in for 40 contracts. I was in for an average cost of $34 per contract. So I'm about what? Under $1,400, just under $1,400. And what could I have been in for? Just waited longer. Let's say even got in for $10 a contract. 40 contracts at $10 a contract, $400. I'm in for $1,400. So I could have saved $1,000 on the risk side by showing more patience. So again, when you're entering a trade and you're looking for the opposite movement of whatever the stock or ETF is doing, in case of yesterday, the market was going higher. I'm looking to short the market. I needed to find more certain rejection first. That's a simple thing. Same with stocks. If you're looking to play a bounce, you need to see the bounce first. Don't anticipate the bounce because what we've seen before is a double drop. All right, so that's what's going on there. We can talk about what the SPY is. That's just a quick lesson. Quick lesson is patience instead of struggling with the position, right? Where I took a loss on it, I took a loss and I said 2 minutes later I could have took $1,000 profit. But instead of struggling with the position, if you show enough patience, that position can turn into a rock star play. Okay. Anyway, so I'm going to talk about the SPY. Let's see where we're at. Yeah, I figured we'd be 414 probably at market open. We're 413.31. Let's talk about the dark pool levels of the SPY. Let me just add that to the stream real quick. Now, if you go to the top, you're not going to see the top dark pool level. Let me just get there. Is 411.17. Now, we're missing the dark pool levels above. So what do we do? Well, as we're mathematicians here, we look and we say, okay, just under 409, 417, that's about $2.40 difference. You go 406.50, 408.84, $2.34 difference. 404.17, 406.50, $2 and what? 33 cents difference, right? So you're seeing the trend here. $2.33 would put this right at 417. So that's the difference here. 233. So I say to myself, what's the next dark pool level that is likely higher? Okay. At $2.33, I go 413.50. All right. We're sitting right now at 413. So the key number I'm going to look for today is going to be 413. If we bust through 413, bullish. How high can we go? Well, I'll say, okay, 413.50, add another 250 to that. So now you're saying 416, but a little under. And then you add another 250 to that, you're saying 418. You add another 250 to that, you're 421. So those are my key ranges that I'm going to follow. As we break one level, it is likely we will go to the higher level. Now, if we think back what the market was doing for the last 3 weeks, we're talking about buy the dip, buy the dip, buy the dip. So it's going to be very important what's going to happen. Now, I'm still a bear, so I'll give you the bear case scenario as well. The SPY is sitting at 413 right now. I just talked about the level that could be rejection. Just add it there again. So we're sitting at 413. I'm looking at 411, right? 411.17. If we drop past that, I would almost guarantee that 409 or just under that would be support. So if the market does decide to do some tricky shit this morning, which would be great for us option traders, right? We're in a trade, get the drop, out of a trade, get a spike, out of the trade, unless you have longer term positions. But for me, I mean, based on the price action I'm seeing, based on the volume's not killer. Volume was so weak yesterday. I really want to let it play out, meaning I'm not going to make a decision on what my position is going to be in the market today. If you've already come up with a decision like the market's going to rip higher to 420, then you should play your position accordingly. If you're a bear who says, okay, this is BS, the market at 413, they were only anticipating like $1.50 move, so we're going to come back to at least 410 or 411, then you could play your puts, right? As long as you have your strategy. Me, I haven't devised a strategy yet. I really want to let the market open. I don't have any positions other than about, what do I have, about 16 coin puts right now, but Bitcoin is moving up. Yeah, coin's up 3% pre-market. What will I do? Well, they were far out of the money. There were $60 options. I spent $20 a piece. So I'm in for about $260. Again, not a killer position. When I'm 100% sure of something, if I knew the market was going to rip to 418 today, it would be a $10,000 trade. If I knew the market was bullshit this morning and was going to drop to 405, 406, then I would say, okay, I'll put in a $10,000 position. But I don't know. So what am I going to do? Well, I want to make money today. So if you want to make money today and you're not sure what's going to happen, what are you going to do? You're going to sit out on the sidelines. Sit on the sidelines until I see rejection in the market or confirmation of support with volume. It's got to be with volume. If I see confirmation of support with volume, I can get into calls. So what calls could I get into? All right, that's great because I'll look at my watch list right here. One of the ones I was watching was Upstart. So let me find Upstart. It's obviously down a bunch, I think. Here we go. It's already up 3%. Why? Because there's been massive demand for Upstart. This is your Upstart chart, okay? Past what? 9 trading days. What do you see? Green, inflow, higher price. Green, inflow, higher price. Market struggling, had one red day, one outflow day. So Upstart's on my list. I try and find stocks that are in demand in a green market. Another stock that is probably up. It's not tech, but let's find where's McDonald's. Why? Because McDonald's has been up every day except one for the past like 20 days. What does that mean? Well, McDonald's was closing their headquarters in the U.S. They were doing some other things, massive layoffs, still higher. So, I mean, there are certain stocks you want to be involved with. Caterpillar had a bunch of selling off, right? This is the 3-month chart. So you can probably go back to the 1-month chart. Found a new bottom. Where's it going to go? Well, Caterpillar will probably go back up to $230. It's only 221 right now. 221, 222. So yeah, I mean, you could be long here. Team G, here you go, man. Simple as that, man. You're long gold, right? You're long GDX. You're long Caterpillar. And you're long U.S. Steel, which I mentioned U.S. Steel the other day. All your returns, 88% to 333 from yesterday alone. Good setups, yeah. U.S. Steel has had great setup for a while. Gold's been pressing higher ever since, yes, the bank failure. Exactly. And the great thing about gold is, as it's pressing new highs, there's a statistical analysis that's giving you like 84 or 90% of the time it's going to go up the next week. So it's going to work 9 out of the next 10 times or 8 out of the next 10 times where it's going to be higher the next week because gold hit an all-time high. The same is true with stocks. Stocks that you see hit all-time highs, they generally continue going north once they hit that all-time high. So if you're looking 4 months out and you're looking at stocks that hit new all-time highs, they have lists every day. There's a great investment tool for people. All right. What other kind of questions? Yes, Shanene, that's me. Tesla shot up due to CPI. Do you think it'll stay up bullish rest of the day? I know that Tesla, Nvidia, Apple will lead the market. I also zoom out and say they keep buying the dips. I don't agree with it, but they keep buying the dips. And it's not silly money that's buying the dips. It's not like a pump and dump. They hold on to these positions. These are hedge funds, and there's still a shitload of money on the sidelines. Now, what worries me about the economy is companies' earnings are coming shitty and earnings season is just starting. So this pump could be a pump, but once earnings start coming back weak, there will be a dump. Okay. And I think gold will dump. I think most everything will dump when the market dumps. There's not going to be one industry, healthcare, energy. When we decide we're going into recession, it's going to happen when earnings come back bad. Now, of the companies that reported, I think we've only seen like 20 companies report out of the 500 on the S&P 500 so far. And their average, their average earnings per share are down 21% year over year. 21%, which means all the estimates are going to come down. I'm just going to see that. Now, the movement that was implied for today, just so you guys know, and this is someone I follow on Twitter, but he's a numbers guy, analytics guy, told me that tomorrow's movement based on basically today's 0 days till expiration, the anticipated movement in the SPY is going to be 3.35% plus or minus. So let's take where we closed yesterday. 409.72. Okay. We're going to say it's green because we're green right now, right? So we'll add 3.35%. Or points, sorry. So 3 points puts us at 412, 35 puts us at 413.07. So 413.07 was the implied move. What does that mean? There's always a standard deviation, meaning we can always slightly go. It's never going to land exactly on that number. It should close here. It shouldn't close there, something to that extent. But it's telling me we're at 413 and change, right? 413.07. I'll say plus or minus. So 414.07, 412.07. Actually, it's probably not going to go down. So it's probably somewhere between 413.07 and 414.07. So I'll just make my prediction 413, 414. Now I want to show you guys something else I saw and I caught because we always talk about analytics, bullish divergence, bearish divergence. So if you were looking at the market yesterday and you were extremely bullish, net flow, is this the one I caught? Yeah, here we go. Nope, not net flow. I looked at the algo flow. Here we go. The algo flow for the SPY yesterday. We talk about bullish divergence where the algo's up here and the price of the ETF is down here. Red line up here, price down here. What do they always do? They always cross over. So when we see that there's a big divergence, meaning one is telling you, like the price was up here, and the algos were consistently telling you the price should be down here. So when I thought, and I still thought all throughout the afternoon, we were going to drop in the market. God damn, I hope you guys are looking at this with me. You're not. Awesome. Okay, now you are looking at it with me. So for everybody there that thought I was talking, and you'll always see these two lines cross over. One is an algorithm, which is the red line. One is the stock price, which is the yellow line. They always cross over. So when you see the algorithms up here and the stock price or the ETF price is down here, it's likely the ETF will go up because there's always going to be some type of divergence. They almost crossed over here, but they did not. All right. The algo went back up. The market went back down. Then the market finally shot up. What was the algorithm telling you? The algorithm was telling you they thought the market should have been at 409 and the market was at 410.50. I got into my puts here. What happened? Well, my puts were off 50%. So even the algorithms could be wrong. But what always happens, again, always, you didn't hear me say sometimes, what always will happen is the algorithm will either shoot up or the stock price will shoot down. And they will cross somewhere in between here. And someone's saying, well, how the hell do I use that? All right, somebody asked about Tesla. Well, let's look at what Tesla. I mean, we're kind of looking for bearish or bullish divergence. And we have a tool on here that will tell you the divergences you can look for, the largest divergences, right? But let's look at Tesla because I look at specific stocks that I know have volume. All right, so we'll do algo flow, Tesla. All right, what are you seeing? Here we go. Algo flow, stock price. Stock price, what did we close at? 186.50. Where's the algorithm telling you it should be? Higher. It's a positive above 1. I know Tesla's already shooting up this morning, so I can't tell you what this is going to be. But during the market, you could check at 11 a.m. I bet you the algos and the flows are going to look different. Let's see if we can find one. What did I mention? I mentioned Upstart this morning. So let's see Upstart. See the algo flow. It's probably going to be all bullish. Same. Probably see the same as that. Okay. What does this mean? I always get this, Matt. What does this mean? It means there's not enough volume. There's not enough activity. If I look at NVIDIA, you'll never see something like that. Algo flow. Let's see NVIDIA, because a lot of people I heard NVIDIA saying 295, but we know if NVIDIA drops, it could drop and not find support until 258 or 260. So right now, what would I do if I was playing NVIDIA? I wouldn't play NVIDIA. The algorithm is telling me the price should be right here. The flow is telling me the price should be right here. Now, if the market opens and the algorithm all of a sudden shoots up because the market's up here and the stock price is still 274 and the algorithm says 278, well, then I could jump into some bearish activity. So again, if you guys want me to look at anything, Romeo is trading live today. So that's good. Listen to Matt. Elevated trades, such a powerful way. Yeah, patience, man. Patience. Again, I am the most impatient person. I am always early, and I'm always early to sell as well. I'm not even late. I'm always early. Okay, so patience. Looking at puts on MU, waiting for an entry. I'd be very cautious. On my watch list, if I was looking at Micron, what would I do? I would add Micron, AMD, and NVIDIA all right next to each other, because I'm looking for some type of discrepancy. For instance, Micron's up 8%, AMD and NVIDIA are only up 4%. I might play, a put and a call, to put something to that extent, get the arbitrage basically. Quick question, side question. Okay, thoughts on coin? Well, shit. We know I have 16 coin puts. I'm sure coin is ripping pre-market. Let me take a look at coin. 2.72. Again, I'm going to hold on to them. It could be scary. They could be worth nothing, but they're so far out of the money that my 18-cent level right now will probably go down to 14 cents, something like that, but could easily double to 28 cents, which would make me 40% positive. So I'm going to hold on to those. I'm in 16 contracts, 20 cents each. So about $320. But let's go back to the flows and algos room, because there got to be some stocks we can find some discrepancies in. So I just want to look at airlines as well, because I said to myself, if CPI comes in light, I know the travel industry is picking up. I know there are hotels in Europe that are booked solid at ridiculous prices for the summer. So I'm going to look at United Airlines. So I'm going to look at the algo flow for United. I'm going to look at the net flow for United. All right, the algo flow. Algorithm is telling me it's going to come down here. It's up here right now. So it's showing me bearish divergence. Now, it doesn't mean that they're going to connect at some point, but actually, I would have to take a bearish position when I saw UAL hit the top today. So that might actually be a trade that I'm going to look at today. I'm going to look at it in my phone right now and do it live with you. Why? Because it's showing me divergence. It's showing me the price is up here. The algo thinks it's down here. It had 3 straight days of inflow. Market, it's basically even. I can't see where it is pre-market. It's up 0.32%. So it's at $44.46, almost $44.50. Yesterday's high was right here, $44.44. So we're right at yesterday's high. So if the market spikes on open and this is showing me bearish divergence, guess what I'm going to do? Well, first, let's check out the flow sum. Flow sum, hopefully it shows and there's enough activity for it to show. It might not. Yeah. Let's check out the net flow for UAL. I mean, this might be a trade for me right here. And it's great when I find a trade. Okay, this is great. So let's blow this up here. What am I looking at? Costs for calls. Well, they're down here. So as the stock has been going higher the past 3 days, sorry, voice thing. As the stock's going higher past 3 days, the algorithm, right? The net premiums for calls, nobody wants them. It's going down. It's costing less for calls. The cost for puts, it's still up here. It's still above zero. As long as it stays above zero, I actually would look for the top on UAL today. Price is up here, 44.44. Right now it's 44.46. So I'm going to look at that. I can't see the flows until the market opens. So I could use some other tools to look at UAL. But again, doing a live stream right now. We're not planning my day. But for those of you who are stuck with me, I'm going to look at airlines. So I'm going to look at UAL, or I'm going to look at Delta. Is that why I was? I was probably too close to the mic. Sorry, no voice today. All right. So yeah, I think that's a good lesson right here with UAL. Appreciate it. If you like what I said, please thumbs up. Join me tomorrow morning. We have PPI. So let's go back to, let's just finish it off and give my prediction on the SPY again. Let's see where the SPY is. 0.7 up. which was anticipated. I really hope they sell the open. I hope we see a drop at open and we touch that 409 support level. If we see 409 as support, I can get bullish the market. Simple as that. So if we spike where we are, we see drop, support at 409, I can get bullish. I wouldn't be bullish. It's hard for me to be bullish in this market with everything going on, especially when we're gapping up 0.7% this morning. Now, again, I heard CPI wasn't that important. It's mostly going to be about earnings. So I'm not buying this spike. I'm using the strategy that the market goes different levels. So last dark pool level is 211 and change. So we had $2.34 that, and we're at 413.50. That's the number I'm looking for today, 413.50. So everybody that's stuck with me, thank you so much. I'm heading over to Discord. See you guys in a little bit.